But as I say, this is an advertisement. This is crying out to you. Go long, or buy a leap. Buy a leap. Do something, because these kind of formations are obvious to the technician. So there'll be other technicians out there doing it, and you know, if you're going to keep up with them, you have to know this stuff. Now, the thing about it is that it's so extremely simple. Okay, it's very, very simple. I mean, if you read sometimes people say, "Oh my God, the 10th edition got all those pages, all those charts." Well, the reason that the book has lasted since 1948 and is now about 1 million copies in print is because it's very easy to read. I mean, it's not just an analysis, it's not just a presentation of the material. There is a lot of inherent wisdom in it, the wisdom of John Magee and Edwards. So once you get on to how simple this is and how simple things are, you'll be disabused of the notion that technical analysis is a difficult subject. It's not. It's not at all difficult, and it's just like if you look at the markets right now, it's like a North Star for a trader or a technician to look at the chart now and listen to all of the Chicken Littles saying that the sky is going to fall, or there are 7 reasons for the market to crash, or there are 10 reasons for the market to crash. You know, what were those people saying 200 points ago in the S&P, or 300 points, or 400 points, what were they saying? They've been saying it all that time. And they're depending on the end of the world as we know it occurring. If you keep saying so enough, eventually it will happen, you know? So yes, there's going to be a reaction, and nobody knows when. You will recognize it by the breaking of short-term trend lines, but nobody knows when that's going to occur. But if you look at, I'll draw up the chart of the present market in just a minute, and we'll take a look at it. My message to this group is that I can't imagine how an option trader could not have some sort of systematic approach or method to the market. Larry McMillan says, you know, the ultimate arbiter of option pricing is the behavior of the stock. If you don't know what's happening with the stock, you don't know what's happening. You're like flying blind. I mean, you buy an option, how can you analyze an option without an opinion or an analysis as to what the stock is going to do? And you've seen from some of the charts I've showed you here, you've seen how you could get an analysis. I mean, a down gap, an up gap, a power move, all those things are telling you something. Things that enlighten your options trading. So, so if you don't have a system, if you don't have a method, you can certainly, I mean, Edwards and Magee is a old-fashioned. Okay, all you need is a ruler. All you need is a ruler and the knowledge of the market vocabulary. But there are other potential systems that you can use. You can use moving average systems work terrific in a bull market, which is what we've got right now. There is the original Turtles, Richard Dennis's Turtles. They had a good system, which was a natural system. It was a high-low breakout. You break the 20-day high, you go long. You broke the 10-day low, you sell your longs. There are a number of systems like that that can guide your trading, but you have to have something to guide your trading. If you don't have something to guide your trading, there's a severe question in my mind: are you making any money? You know, if you're making money, I tell my graduate students sometime, you know, there are all these methods and indicators, and you know, there's percent R and MACD and oscillators and RSI, and I tell them there's just one thing that's important. You can drive a nail with a screwdriver. Okay, so if you've got a screwdriver that's working right in the market, ignore everything I say. The potential systems, turtle systems, moving average systems, I mean, you can tailor the moving average to your taste, to the length of your taste. I mean, you can trade a 50-day moving average, a 20-day moving average. Larry McMillan says that when he gets on a winning option trade, first thing he does when he makes a win, he kicks out a third of his position, taking his profits, and then he sticks with the trade until the stock or the underlying breaks the 20-day moving average. You know, cut your losses short and let your profits run. That's a way, a 20-day moving average. You can base your systems on other phenomena. You base it on gaps. As I say, you can base it on classical charting, which is what happens here. I mean, I see all of my friends and colleagues. I belong to chat lists where people are constantly in the process of trying to reinvent the philosopher's stone, and every once in a while they say, "Gee, how'd you get onto this? How have you been long so long?" So there are a number of systems you can use here. You can use point and figure systems, but you should have some method of knowing what the market is, some way of evaluating the market at the present, so that you don't buy a call in a raving downtrend, or you don't sell a put. You don't sell a put in a raving downtrend. You don't buy a put in a raving uptrend. Those are just basic things. It's like Larry McMillan says. He says, you know, there are two sins in poker playing. One is to sit on a bad hand and not fold it, and the other sin is not to bet a good hand, not to aggressively bet a good hand. Well, you get a good hand when you see this analysis, when you have some technical means of determining where the market is and where it's likely to go. When you have that, you have a good hand. Back when I was running options research, I created a system that was for writing naked options. it was based on a trend analysis. If the market was going up strongly, then we sold puts. If the market was going down strongly, we sold calls. And I assume all you guys know who Blair Hall was, right? Or Blair Hall is. Blair Hall still is. He's not was yet. I showed that Blair Hall is probably the most sophisticated arbitrageur of our time, and preternaturally smart. I showed Blair this system, and he said, that's how I made 20% of my profits, selling naked calls and naked puts on stocks that were in a trend up or a trend down. So that's out there to do. I'm not saying that you should do this without watching the traffic both ways as you cross the street. Please watch the traffic. But a trade is not necessarily, you're not stuck in a trade. Okay? You set a risk objective, and you get out of the trade when you've taken all the risk you intend to take. So you can't sit on a trade. One of the characteristics of Magee's practice and the characteristic of my practice is if I make a mistake, I can correct it the next morning. Okay? And if I make a bad trade, I can correct it the next morning. I don't, mutual fund managers, hedge fund, a lot of people think, oh, okay, I'm gonna put $1 billion in this and sit on it like a goose on eggs, and you don't have to do that. You can cut the trade off, you can change it. So that's a characteristic of the kind of systems that I run, and that's the kind of characteristic that I think you should run in your option trading. You should never make an option trade without a clear measurement of what your risk is. And so the risk is absolutely known, because you determine that with where you put your stop. So the risk then becomes, the operational risk becomes the market price to your stop. And you must have the discipline to observe your stop. I mean, you read Schwager's interviews with market wizards, and over and over and over again, so what's the most important thing to success in trading? And they say discipline. So if you're not trading, trading with stops, and you're not trading with clearly defined risk parameters, you're hurting no one but yourself. Although your wife may be mad at you too, or your husband. So you get messages from the market like these measured moves. You get the P and F targeting. There are also other methods in technical analysis for forecasting or predicting or trying to predict where a move is going to go. I won't go into them at great length, but I'll just say that you have point and figure charting. You have formation depth, for example, in the case of the gold rounding bottom. If you took the bottom of the formation to the neckline, you would have a measurement that you could base a forecast on. There are also even more sophisticated methods than that. So let me say this about that, or let me say that about this.
10, 11, 12 minutes left.
Yeah, okay. here is a little book that I wrote about how to see signals, what signals look like, and what their generic categories are and how they function. You can get this. You can get this on Amazon. That's one of my books. I can't pass up a joke. I compared the Dow theory, as you see from Chris's chart over here. Chris and I took all the Dow theory signals and all of Magee's basing point signals and charted them on here so that you can see where the trades were made, so that you can compare Magee's basing point procedure to Dow theory. And I said that working Dow theory is like the Roman priests that haruspicated with the innards of chickens and goats and things. So at any given moment, the Dow theory sacred priests will be in there saying, okay, we got a Dow theory signal, or we don't have a Dow theory signal. I bet there's not a person in this room knows where the Dow theory signal is right now. No, that's right. In fact, I'm not even sure where it is. Okay, so this book goes at depth into a long-term trend following method, the method I showed you with the stair stops, and compares it to the performance of Dow theory.
I don't think that's available on Amazon.
Well, it will be shortly. It may be down right this minute because of some proofreading things that are going on. There, let's see. Here's a book that I wrote about what happens at the bottom of trends when you have bear markets. It has my text, of course, and it also has an even more valuable thing, which is a reprint of Paul Desmond's a Dow Award-winning paper on how market bottoms form. Very, very, very good stuff. Let's see. Generally speaking, some of these may not be immediately available on Amazon, but they will be in a week or so. I had to take some of them down for proofreading problems. So those, in addition to those books, and those books exhaustively go through what I've talked about here today. I mean, they have drills, exercises, charts that illuminate what I've been talking about here. So let me also say that we have a free offer on my website where you can get I think it's a 3-month subscription. If you go to edwardsmagee.com, edwards-magee.com/MTA-offer, OFFER. So you can sign up there for a 3-month subscription and watch me walk the high wire in real time.